The structure of the cash flow statement. So we're going to do question 14 next. When you're doing a cash flow statement, basically you've got the three sections, and the first section is operating activities. And basically the cash received from customers is always going to be the first line of the cash flow statement. You then have cash paid to suppliers and employees. Basically this is just the that minus that will give you cash paid for operations. And you always will find, well, virtually always tax paid is the next item, and then you've got interest paid. Okay? So basically what I'm saying is that when you're doing a cash flow statement, you can actually basically write out some kind of structure for yourself before you actually start looking at what the numbers are going to be, just to give yourself a bit of security. Okay? So basically your operating activities, I would certainly leave lines. So I'd leave a few lines here because you're going to probably have numbers in brackets over there, because basically your cash paid to suppliers and employees is going to be made up of quite a few different numbers. Okay, so so you're going to have here, just leave a few lines. Be quite generous with your space, just in case you need a bit more space. Generally, what you find is that you will draw a line here and actually put the total over here in a second column. Okay, so basically, when you do 14, draw up operating activities, and give yourself a structure so that it's easy when you have to do the numbers. The other thing about actually drawing up a structure is that you can then go and do whatever's the easiest number for you to do first. You don't have to actually do the calculations in sequence. Okay, and you'll generally find that the very easy numbers are actually kind of towards the bottom, financing activities. So investing activities, I did a question earlier with some people, and basically we got some figures there. Obviously this here, cash paid for property, plant and equipment, is obviously an outflow, so an outflow will be in brackets. So this is your second part of the cash flow statement. Cash received from sale of PPE, so actually selling PPE is obviously an inflow. So generally what you're going to have is you're going to have these two items under investing activities, any money that you receive from the sale of a non-current asset, and any money paid for the purchase of a non-current asset. Okay? And to make that calculation, you obviously draw up what we did earlier, which was the accumulated depreciation T account and the asset account. Okay, do not net these off. So some people would like to net them off. Do not net them off. You have to show them separately. And the other thing is, if you have, say, 3 different categories of property, plant and equipment, you might have land, you might have building, and you might have equipment. You might have land and building and equipment. Treat them separately. So if you have cash received from the sale of land, and you also have cash received from the sale of equipment, don't add those two together. Okay, good. Okay, the last one that we've got is financing activities. So generally, how do you finance the business? Basically, what are your inflows? You're going to issue shares, you're going to get bank loans. So these items here are generally pretty easy as well, because all that you generally do, obviously each cash flow is different, but generally what you're doing is you're basically looking at the balance sheet, you're looking at the share capital account, and you're looking at the opening balance and the closing balance and seeing if there's any change that's taken place. And obviously if the share capital has increased, then obviously you've got an issue of shares, basically. Okay, so if it's gone from 50 to 100, you can assume, unless there's a note which indicates otherwise, that share issues or shares have been issued to the value of 50. Cash received from bank loan, obviously if the bank loan has increased under non-current liabilities, once again, you'll put this here and simply looking at the balance sheet and looking at opening balance, closing balance. What's happened? Has it gone from 90 to 110, which means you've received a bank loan of 20, or has it gone from 90 to 70, which means you've basically repaid some of your bank loan? So The 90 to 70 means that you paid back 20,000, or 20,000. Dividends paid are obviously under financing activities because of the fact that your dividends are paid as a result of the issue of shares. Okay, and just the last items would be your net cash flow for the year. So basically, operating, investing, and financing. Operating, investing, and financing will give you your total. So basically, adding up the totals from each of the three categories will give you that. You then add your opening balance, which is generally your bank balance. You might have cash equivalents as well, but we'll go into that in a bit more detail a bit later. But it generally is your bank balance. Okay, so A plus B will give you your closing bank balance generally. Yeah? Okay, so when you do a question, give yourself a bit of structure so that you can actually start and you're not, and you kind of feel like you know what you're doing. Okay, and then go to whatever's the easiest thing to do first. Okay, and end up with more difficult ones. Pick up the easy marks first.